Hello everyone and welcome to today's cryptocurrency update for March 2, 2022, which will be just a kind of run-of-the-mill regular update. Nothing too concerning going on, so to say, nothing much new to say that other than that things are progressing quite nicely the way I anticipated. Okay, so let's start off with Avalanche, just to show you the importance of the cloud. This is the cloud. I like it, especially, of course, since all our information these days is in the cloud, but this is a whole different cloud. This is a, I would say, strength momentum based type of indicator. And you can see how Avalanche is trying to struggle. And as I said on Monday, we need to get above that 90 level. It's holding as resistance. If we don't get above it, we have the large risk of failing and falling lower. So watch the 90 level for the breakout. Why is that important? Because Luna, or Terra, but it's called Luna. I know what's up with all this solar project, so to say. Once it broke above the cloud, we got a nice follow through. It went from 72 to 90. So that is a very nice upward projection here. That is the power of the cloud. Once you break above the cloud, kind of find support, you can move higher. So this looks really good from a uptrend perspective. And I continue to anticipate higher prices in Luna. Again, if we can break above the recent highs here, I'll put it in the chart. This level here at around $1.00, right? $1.00. If we can get above it, this could target 150 based on simple symmetry, because we bottomed here, let's say, at around 50, this level, and then symmetry breakout can target that high. It really can. I haven't done the Elliott wave count on it in the shorter time frame, just following the trend, but you can see here how the trend really changed from down, where price was below the 10-day, below the 20-day, below the 50-day, but still above the 200-day, and it held support at the 200-day. If you look at the candles, you can really see how it's kind of flip-flopping around it, and eventually decided it wants to stay above it and rallied higher. So that is why the 200-day can be an excellent exit entry signal. Oh, you might have 6-7 days in a row where you buy, sell, buy, sell, buy, sell, and all of them are tiny little losses. Well, you know, don't like losing trades, start gardening or something. If you can't handle losing trades, this is not your game. You got to be able to sit through them, keep them small. This way you can keep them small. And then you can use the 50-day. I've pointed this out ad nauseum, honestly. It's really, really simple. And you would have had some very nice gains already, right? Nothing out of the ordinary here. I like it. The relative strength looks good. I see no sell signals anywhere. We might see some short-term pullbacks. If we can hold for Luna above the clouds, that'd be great. That would be the 50-day, the 10-day moving average. So there is now support. Okay, support is right there. It's on the chart, and breakout can target $1.50 based on simple symmetry. Why do I call it simple? Because it's not like triangular symmetry where you have a lot of weird angles to it. This is just simple up-down symmetry. So that's why it's simple, all right? That's why I call it simple symmetry. Simple is best. Einstein said it once, or probably many times, and last time I checked, Einstein was pretty smart. So I prefer to listen to that man's statements. Moving on to another token. This is Curve. This is going to be a little bit of a segue in. Probably in about a month or two, we'll get a guest speaker online who will talk about some different ways of making money in the crypto sphere. Instead of trading the Bitcoins and the Ethereums, we can look at stable coins, for example. So it's going to be very, very interesting. Stay tuned for that one. It's going to be highly interesting, of high value to you. I think it's going to be great. There's so many ways to go about, and it's going to be entirely different of the work I present, and I think it's going to be of great value to you. So here's Curve. Looks like we completed 5 waves up. in blue here can be C. That's fine. And now we did 5 waves lower. So far, the Elliott wave is filling in nicely. 1, 2, 3, 4. Most likely completed wave 5. And we should now be ideally in a larger B wave bounce back to about $4.35, somewhere around there, plus or minus a couple of cents. Why is that critical level to watch? Well, we broke below it here in January of this year. Broke below it, it tried to recover, and then it failed utterly. So that is a good indication this is important. Before that, it held as support. Okay, you can see it. It held. We just had some intraday stabs, but it was really trying to move away from it, and again here it failed. Here we see the same. It was resistance, and then it broke decisively above it. Here you can see here it was support, kind of been flip-flopping around this level, as you can see quite a lot. Here it was resistance. Here it was resistance, and that's the 50% retrace of this 5-wave decline. So if this is a completion of a larger 5 up, 3, 4, 5, or ABC, it's fine. We should now see a larger decline. And we know from the Elliott wave that after 5 waves lower, expect at the minimum 3 waves back up. That would be wave B, and then we'll get wave C. These are the Fibonacci extensions of 0.618 to 0.764 relationship will bring us down to around $1 plus or minus 20 cents. So first we're going to look higher, then we're going to look lower. Fits as well with the general patterns I'm looking for in Bitcoin and Ethereum, and which I've shared with you for I know many weeks now, and which is filling in quite nicely. Allow me to explain. Very simple. Here in February, remember February 11, I said we're going to see if we can get 5 waves up, a 1, 2, 3, 4, 5, or only 3, A, B, C. I preferred 5. I can't keep this. I can't say this often enough because this is the true power of Elliott wave, and this is the truest example of the probabilities and possibilities of the markets. So we had the low here in January, and then it was up to the market to decide if it wants to do 5 waves up or 3 waves up. I preferred 5 because 5 would make my life easier because then we always know we can't go below the previous lows, all that stuff. When you get 3 waves up, it complicates matters. But what I prefer, the market could care less about. So I preferred 5, selfish, because it makes my life easier. Well, I got only 3. We got only 3. Deal with it. But we knew that this level here, I think it was about 41,581, had to hold. Okay, that had to hold. If not, I forecast we would drop to 35,000 plus or minus 1,000. Okay, it didn't hold on February 17. Where did we bottom? 34,500. This is an absolute truest power of Elliott wave. You can't get it more narrow than this. Oh yes, I had an ideal downside target here somewhere around 36, 37,000, maybe 37, 38,000. Let's say 37,000 plus or minus 1,000 based on Fibonacci extensions. That's fine. That was really ideal. Market doesn't owe us anything. Bottom line is that we reached this 35 plus or minus 1,000. We went a little bit lower than the ideal downside target zone on this breakdown because that was based on Fibonacci extensions of the A-B relationship, and we didn't get it. Regardless, we knew when we would bottom here, it would go back up again. All right, when we were here in February 11th, we already knew that if we would break, we would go lower and then higher. All right, we're almost a month later, and it's so far come entirely to fruition. It's not because I'm so great, not at all. I just apply what the rule book says. This is what you have to expect, and this is exactly what happened. So far so good. Looks like we still have a larger B wave bounce. That remains my preferred scenario. Okay, but again, just like back in February, what I preferred the market didn't give us, we might not get it now either, and we may have to still wait. I still like to see this, what's going on, because, and that's the wrong chart, because we broke above the cloud, right? The cloud was here on Monday. I said we broke above it, and now see if it can hold as support. Because if it holds as support, we can get something similar like this, as in Luna. Okay, that's why it's important. Luna shows the way, right? Luna is really front running everything. So that's the hopeful anticipation. there's no guarantee it will do it, but that's the hopeful anticipation, right? I have no guarantees. I cannot promise you 100% certainty. I can only show you what the most likely path is based on a lot of patterns, Elliott wave, that type of stuff. But what we did know again was February 11th, if we can hold this level here, it was 41,581, I believe, then we can still move 5 waves up, then we will do 3 waves down and then another 5 waves up. But if we don't hold that level, expect us to go as low as 35,000 plus minus 1,000, nailed it, and then we'll move back higher. So far, so good. Now, the next question is, can we now do this rally, right? Now we have gone, this was door A versus door B. Door A, when this takes time to develop, so this door A versus door B remains still active and important. Door A was 5 waves up, door B was 3 waves up. We went through door B. Excellent, we dropped, and now we're back to pretty much the scene of the crime. Once we go through one door, 2 other doors open again. This is always the case because we work with a probabilistic environment. It's not that once you step through the door, that's it, and we don't need to guess anymore, so to say. It will always remain the case, and you always have to think like a criminal stealing from other criminals. Okay, so you have to, that makes you maybe a good person. I don't know, maybe the Robin Hood, so to say. So that brings us back to the possibility that we may have a potential very complex flat wave 4 on our hands. Okay, let me see if I can grab this 4. So we can still, so this was 3 waves lower. So this is then 1, 2, 3 waves higher, 3 waves lower, and we might now get 5 waves higher. Okay, what does that make? 3, 3, 5. From Elliott wave, we then know a 3, 3, 5 is a flat. So we had then wave A was 3 waves, wave B was 3 waves, and now wave C should be 5 waves. Okay, there. Now we get a wave 4 there, and then a wave 5 there. Okay. They're not really minor in the sense that we have the wave degree correct. There are minute ones. This should then be minor A, minor B, minor C, but C should be 5 waves and should not go over the 76.4% level, which is 47,000 and a little bit. Okay. If we do, then wave 4 is too much, and then I'm fully in the camp that we're in wave B. Okay. If this is a wave 4, and I'm going to show you how it works, then we're going to revisit this level here once again for a wave 5 right here, and then we're going to get our B wave. Okay, then we get our B wave finally. So we have now these 2 options on the table. All right, the option we had here, door A and B, we took door B, we bottomed and we rallied. All right, that then opens the potential for this wave 4. Now that is the red path. If we are going to break above this level, I'm going to look for the green path. Very simple. Okay, very simple. So how to trade this? As usual, trade it a little bit carefully, trade it with stops and all those things. Take profits along the way, all those things. Depends all on your time frame. All right, a little bit, because if you buy here, you don't want to see it go back all the way here, right? And then go back up. Hopefully we'll go back up, right? That's all hopeful. You hope with it. We don't trade on hope, we trade on actual numbers. Just as I was able with actual numbers to forecast what would happen if we would break below this level here, right? 41,400. If we would break below this level here, then we would go to this level here. Okay, I narrowed it down in my daily updates a little bit higher. That's fine. It happens. Again, my preference for 5 up was not here heard by the market, so be it. So then we have to be very careful. And if we break above this level, we can move higher. That's simply the way we continue to navigate the market. All right, thanks for not sharing, but that's fine, of saving, but that is what happens. So then I want to zoom out a little bit. Again, I still prefer this B wave bounce and then a C wave lower and then higher. And then I think we have a massive, what I would call sideways consolidation pattern on our hands. Because if you would look at it, and this is quarterly candles, so 1 quarter is of course 3 months. This is Bitcoin on stock charts since 2014. I know it goes all the way back to 2010, I believe, or early 2011. I don't know why that data is not on stock charts, but it's fine. It's all about data availability. What we so far see is how well every quarter, you would say, Bitcoin is holding this 29,000 level, right? Here, the last quarter of 2020, we bumped into it, okay? We held it as support, and then here, this quarter, we held it as support, held it as support. So we need to hold this as support. If we don't hold this, yeah, we can have maybe a little bit of an intra-month stab below it, but definitely a close below it. This is of a quarterly basis. Then I think we fall all the way back here to 5,000, then Bitcoin has topped for a much larger top. Prefer not to see it this way. Now we see how we simply have been trading in this sideways price pattern between, I would say, 60,000 and 29,000. So make it 60,000, 30,000, right? For the last 1 quarter, 2 quarter, 3, 4, 5 quarters, not gone anywhere, right? Not gone anywhere. This is so far a bullish consolidation pattern until it is not, but it looks like we have a nice bull flag. So this is the flagpole, this is the flag, and if we get the breakout, that means a quarterly close, I would say above a little bit over 59, 60,000, right? So somewhere around there. If we get that quarterly close above it, then we simply add the length of the flagpole to the bottom of the flag. This is pure technical analysis. And then we can target 85,000. 85,000 is then the minimum upside target. So a quarterly close over 60,000, give it a little bit leeway, can target 85,000. And that's the minimum upside target. And then I think that 150,000 plus or minus 50,000 upside target would look really, really nice. So the downside risk here is a quarterly close below 29,000, and not necessarily on the quarterly time frame. It can also be on the monthly, etc. But this is just to kind of zoom out and make it very simple, and just show you how much of a sideways consolidation we've had over time, and how Bitcoin has not done much over the last year plus. It really has. We have some stabs above it. That's fine. But this is a, so far, nice, clean, clear consolidation pattern after a big rally. And that is a hallmark of a fourth wave. Fourth waves are most often sideways, messy consolidation patterns. We've had this massive run up. Most of the time, institutions sell into the third wave ramp because the fifth wave can be disappointing, can even fail, not make new all-time highs. There's a lot of bad news out there, the sentiment changes, and eventually we'll get the breakout and we move higher. So that looks good. It always helps to zoom out and put everything in perspective. The quarterly chart is 100% bullish. It looks really good. I see nothing bearish on this one. Let's do the same for Ethereum. Okay, this is Ethereum's quarterly chart. I have a little bit less price data available, but it's the same idea. The thick outlined box here shows how Ethereum is trading between 22.50 and about 37.50 for the last 1 quarter, 2 quarters, 3 quarters, and on a closing basis here. You can see it captures these past 3 to 4 quarters, 90% of the price action. Now I can shape it down a little bit, so to say, to 2000. As you can see, that captures even more price data. If I do 2000, then we capture the whole last 4 quarters. Essentially been a sideways consolidation, okay? This is then the flagpole. We do the same. We get the breakout, I would say a quarterly close over 3,750. This is just applying the quarterly chart, by the way. I'm not going to sit and wait for a quarter, because by the time we get the breakout, we're probably already here. But you'll be well alerted of that fact, of course. But it just shows you the price pattern we're in. And then we can reach 6,000. Now we have some of these higher wigs here, so to say, that were sold down, and we can add that to the upside target, and that targets 7,500. Oopsies, that already gets me very close to the 10,000 level I'm looking for. Okay, so nothing out of the ordinary yet, and we can also clearly see what the downside risk is. If we go essentially below 1750, maybe 2000, then I think we have to consider a much more bearish alternative. But so far, that's not the case. I think we're looking pretty good. So how does it then look shorter term? Again, shorter term, let's look at how the price action has been since pretty much May of last year. This has been pretty much sideways, right? We went down, we went up, not so much higher, just a little bit. And now we're kind of back to the scene of the crime where we were in May and April of last year. So almost a year of nothing, right? It's now March. So almost a sooner year of nothing. So yes, it's been very frustrating, but this is still a reasonably nice sideways consolidation pattern. So my preferred view is that we're going to do a bounce and then lower. We'll probably revisit anywhere between, I would say, 2200 and 1700. That would be my ideal wave C of 4 target zone. Okay, that fits quite well here with this box, right? This box here, somewhere there, we should expect a bottom. Give and take. We'll narrow it down once we get there. For now, I prefer to look a little bit higher, please. They don't have to necessarily. I really want to see price now move above 3065 and then above 3190. This is this orange box that I have had on the chart and told that if we break above it, then we can move here. We haven't done so yet. We're kind of bumping into its resistance. Support is now 2750. We blew past it on Monday. Okay, it's been struggling for the last couple of days, especially last weekend, Friday, Saturday, Sunday, false breakdown and higher. So these type of big rallies, one-day rallies, are very characteristic also of a type of bear market behavior. Then we don't have much of a follow through and we fall below again. So it's always this very stair-steppy type of price action. Big jump and then we fall back below, and then another big jump and fall back below. Whereas in bull markets, this is what you want to see here. June, it's just relentless. Just keep on buying and buying. You just have a one-day dip and it keeps buying and buying and buying. That's more characteristic of a bull market than what we've seen so far. So I remain of the conviction that we will continue to encounter this kind of sloppy price action. So continuously question marks, continuously uncertainty. But again, we bottomed nicely on a closing basis here in this ideal B wave target zone. Yeah, we had this one intraday February 24th stab lower. Again, I can't nail every single price movement down to the T. It's just impossible. It's really, really impossible. But otherwise, it's worked really well. I'm not too unhappy about this. I wish I could catch that last little flash crash lower, but again, I can't just capture everything. But still looks good. I prefer this wave count, and now we need to hold these support levels and not start to falter once again and zigzag around this. I wouldn't like to see that. Okay, so moving on to Solana. Solana turned resistance at 95 back into support. Well, you can see how we've been flip-flopping around this level for eternity now, and we really now need to see it go back above 115. If we go back above 115, well, I wouldn't say we're going to go to 190. That's maybe a little bit too optimistic. Then let's say if we can reach 150. Okay, again, be very cautious here because breakouts are often fakies in bear markets. Okay, so again, know the market environment you're in. That's why we want to wait for price to go above the cloud in the 50-day, that the trend starts to become much stronger than compared to a weak trend, because in weak trends you often get false breakouts because there's just simply more selling pressure. To recap, Avalanche needs to get back above 90 because that is now resistance loud and clear. Luna shows us what happens if we get above the cloud. That's why I showed you for Avalanche. continued upside. That is the most likely path forward, because then we've broken above all these resistance levels. This is literally the cloud. It's like a fog bank that holds price below it. It's just suffocating price. So we need to get above it, because then you have clear skies. It's like an airplane breaching through the clouds, literally. So support is now, of course, at the cloud. And this still has a lot of potential for possibly reaching as high as 150 if we can get above 100, the recent all-time high. I like it. Momentum is strong, looks good. Support is now at about 73. Curve should stair step its way higher to about 434. That is now resistance. Expect the path to be ugly, like an old tree. Lots of zigs and zags. Bitcoin, I prefer it to be in a larger cycle wave 4. We got 3 waves lower, in my humble opinion. We should see 3 waves higher, and then 5 waves lower. Somewhere about 60,500 plus minus 1,000 would be ideal. We might extend. We had the door B being taken. It led us down to 35,000 plus minus 1,000, and we're back to the scene of the crime. So far, so good. So I still think the green to black path is operable, with the caveat that now that we went through door B, another door A and B opens. So door A is this one, and this is door B, and that we have this flat wave 4 there. And I'm going to put the labeling correct now, that this was wave A. Okay, this was wave B, and this is going to be wave C. Okay, and then we'll break lower from that level, and then we're going to move higher from that level, and then we're going to move lower once again. I still expect, if this is the case, everything to be done and dusted, so to say, somewhere later this year, around August. That is still the preferred time frame, based on the average, that's not a halving price pattern that we normally see. So please keep this in mind. And if we're going to break above this level, we can target as high as there. Okay, so then that would be, of course, the green path will then, of course, be this path. Okay, so these are the 2 options, pretty much summed up in one chart. So it's again do or die time. There, saved it, fantastic. Otherwise, Bitcoin broke above the cloud, and now hopefully the cloud can act as support, and then we can move higher in a Luna type of fashion. Fingers crossed, would be great. I prefer it. That's what I prefer, is not necessarily get. Bigger picture wise, nothing has changed. We finally now have a up month. So technically we've done enough if we compare it to the cycle 2 path. As long as you get up months, then you have initially done enough for a B wave, because now we can literally count it on a monthly time frame. But I prefer higher prices. Zooming out further, quarterly chart looks like a massive bull flag pattern that, as long as 29,000 holds, we can then target 85,000 plus on a breakout above a little bit south of 60,000. Same for Ethereum. Look at that. Still looks like a massive sideways consolidation pattern where we pretty much need to hold at around 2,000. Really not should be lower than 1750, and a breakout above 3750 can target 6,000 to about 7,500 on simple technical analysis patterns. For now, shorter term, still trying to figure all this mess out. Expect the short term to be messy, continue with whipsawing price action. Above, I would say 3,065 really starts to open the gates to reach the 4,000 level. Solana as well, back above initial resistance 95, needs to get back above 115, and then we can target 150. So that's really all I have for today. I don't have it on a summary slide. I thought I'd just show you this chart. As I said, just a regular update, nothing out of the ordinary. I can't repeat it enough on what we discovered February 11th has transpired. We went through door B, great. We dropped lower as expected, back to the scene of the crime, and now we have door A and door B to choose once again. one step at a time. This is 3 steps forward, 2 steps back, so to say, right? And we progress, and eventually it will fill in all very, very nicely. We have our price levels to watch to the downside, because there is still downside risk, as I showed you for the 4-5 setup. That risk is still there. It's not off the table. So we're getting closer to the edge of the woods for the bulls, but the bulls are not yet entirely out of the woods, just yet. All right, there I said yet twice in one sentence. That's grammatically wrong. And with that, thank you so much for listening. Take care, trade safe, and I'll see you all on Friday. Bye.